Good morning, everybody. Welcome to the Flow Show. Hope you're doing well, fine and dandy. Got a busy day ahead for us all. Morning, Kay. How you doing, mate?
Good morning, all. Good morning, Ryan. Yeah, I'm doing all right, mate. Ready to rock and roll. Finally, we are going to see the real start of the week, I trust.
Yeah, we shall see. We shall see. Right, lots to get through, lots happening, so lots to look forward to. So let's get stuck right into it. In China, apparently 2 MPC members have said they want more party control over the PBOC. They want to get their fingers deeper into those guys. They're supposed to be independent, but this is China, so I'm not sure how independent they really are anyway. But they want more control. PBOC Governor Pan, meanwhile, has said China has a rich monetary policy tools at its disposal, and there's still room for cutting the RRR. It says monetary policy will promote a mild rebound in consumer prices, so potentially teeing up more RRR cuts to come. Over in Japan, Toyota has said that they're going to make its wage offer to the Labour Union in its next meeting, 13th of March. It's confirmation of pretty much what we already heard anyway, putting a big fat circle around that date for all things Japan, BOJ, the whole lot. Going to be a big old day next week. There's been a ton of sources stuff coming out ahead of the BOJ meeting and that busy week next week. We've had sources saying that they're likely to maintain their forecast for a moderate economic recovery, according to some sources, and they're going to be seen revising down their assessment on consumption and output at the March meeting. So it's some. Then we had a piece from Gigi saying that, some attendees are likely to say that lifting negative interest rate is reasonable at the BOJ's March policy meeting. Now, I just want to maybe clarify that headline. That doesn't mean they're going to want to hike at the next meeting, but just to say that they're looking at potentially hiking and announcing that at the March meeting. So that's a few sources pieces coming out there. Kay, are they sending out a few air balloons, or a lot of it? A lot of it we already know. We know it's all coming around, coming to a head at this time of year, anyway.
Yeah, I mean, there's a lot of those articles coming out now just to prepare in every event or in any event a bit of an I told you so. But interesting is though that MUFG is actually putting the hike on the table for March, and that's the biggest bank in Japan. Used to be Tokyo Mitsubishi. They renamed all of that, and they are putting the hike on the table for March. So that's keeping everything very interesting. But yeah, as we've said, 13th to be encircled in red on the calendar for yen traders and Japan watchers. That's where we're likely going to get a lot more, and we can expect a lot more speculation then around the March meeting, I trust.
Yeah, very much so. That was going to be my next line about MUFG. They're getting set to trade a Japan pivot this March. They're apparently going to build up swaps receiver positions when rates rise. So it's all the snowball's rolling. They can't really stop it now at the moment, can they? It's
No. I mean, it's for us FX that who are more focused on FX. It's still going to be. We are going to probably see a bit of speculation into the 13th, then a reaction on the 13th, and then building up again into the what is it, 21st? The meeting. Let me just quickly check. No, on the 19th. So yeah, it's going to go in 3 legs. But what we probably can assume now with some decent percentage probability is that we are going to find rally sellers on or dip buyers on yen weakness going into next week, I trust.
Yeah, very much so, and probably going to see the yen fairly well bid going over the weeks ahead. Now, we know that the BOJ can surprise. They have surprised previously. But I'm wondering, this isn't one of those times where they want to surprise the market. And the surprise would be if they hiked rates in March. But will they lay the groundwork for an April or later hike at the March meeting? That's what I'm thinking. Let the market do its thing without confirming anything. And then, as we know from central banks, it's not about when they actually do something. It's about the expectation of when they do something. If the Bank of Japan at their March meeting say, we've had the wages or some wage data, we're waiting on a bit more, we are in a position now to think about hiking, that's when you'll get the main move, if there's going to be a main move. And all it will leave was a little confirmation move if and when they do hike.
Yeah,
but
we've seen on the yields really that the market is preparing it, right? Anything from the short to the longer end. Well, if you look at the 10-year JGB yield, you can say like, well, nothing's happening at all. But that comes in just those few BPs higher come when, for instance, the US yields are rather capped or coming off just slightly. They are a bit more beat those yields. So JGBs a little more offered. So that is something that we need to look at, and that's also why I'm saying that we're likely going to see some buyers on decent dips in yen pairs selectively as usual.
Yeah, suffice to say for you folks watching the show, it could be, even if they don't act in March, the March meeting could be more important than the meeting where they actually act, if they tee it all up at this March meeting. But we'll make those further calls next week once we get all this data, wage data and everything coming out next week. Until then, just watch for these sources pieces dropping and here and there, because it is getting the yen moving. Right, over to Australia. We had some GDP data out overnight. If I can find it, where we go in, there we go. So GDP, I think this is the second reading. I could be wrong, can't remember. Quarter on quarter coming in as expected, year on year, a little better than expected. We've had RBNZ's chief economist Conway talking as well, saying that rates need to stay restrictive for a sustained period. He says he finds the declines in core inflation encouraging. Then said the Fed cutting rates before the RBNZ could lead to weaker inflation, which is a bit of a subtle hint that if the Fed goes and they see weak inflation, that will likely trigger them to go as well. So a little bit of lead in. They all say they're not dependent on the Fed, but they all know that if the Fed goes, the waves reach them not long after, Kay.
Yeah, the funny thing was that we're waiting for the Fed to act, and then we wait to see what's going to happen to the Kiwi, and then we may be acting, and then it goes like they're not dependent on the Fed. Yeah, right.
Exactly. No one follows the Fed until they have to follow the Fed.
Yeah, exactly.
That's the main story.
No, I'm just it's just a coincidence that I'm in the queue, you know.
Yeah. Of course. Germany's IFO looking really positive at the moment. In January, they cut their German 2024 GDP forecast to 0.7% from 0.9% that they expected in December. Now we're in March, they've cut that 0.7 to 0.2%. I don't know why they don't just cut out the middleman and put 0 and leave it there for the rest of the year. It's probably more in line with what they're going to get. So a bit bearish on the economy from the IFO there. Eurozone retail sales numbers coming. Let's go look at the German numbers first. Trade balance, an improvement, and we've got a little bit of a pickup in activity, better pickup in activity overall. Decent move in exports and imports So maybe the IFO will need to revise their forecast up after that. This is for January data, so a little bit of a pickup in activity in Germany. Maybe some of those green shoots are poking through. We shall see. Construction PMIs there, not a big number for the market, so don't take too much to heart there. Italy doing okay, they're a bit softer. All the rest went into contraction still. Retail sales from the Eurozone, flattish, 0.1%, hardly gangbusters there. Year on year, not as bad as expected, but still a negative number. So no big signs of activity coming through from the consumer on that front. Back to yesterday's data, all the PMIs dropping further. We had Canada coming out. Their PMI was a little bit better. Where is it? Where is it? There we no. Where is it? Can't find it. Should be there, but it's not. Anyway, a little bit better.
Isn't that one of those that doesn't show up on the calendars?
No, obviously, yeah. It's not on this one. Good job I wrote it down, eh? Anyway, it came in a bit better, 46.6 versus 45.8. Woohoo, go Canada. Then we've got the final US numbers there, which showed an improvement over the flash number and higher than last month, or nearly higher than last month, 52.3. Composite was better. 51.3 was a flash number. So quite a big jump over what was came first hand. Then we got the ISM numbers, and I'll go back to the durables in a minute. Now, the ISM was a bit all over the shop. The headline number came in softer than expected, 52.6. So that was the first negative, down on last month. Prices pulled back as well from 64 to 58.6. Employment went into the negative at 48, so contracting, was expected to rise. But then we got a bit of a counter because new orders beat expectations and rose. But the market really pretty much moved a bit on the prices, but probably more so on the employment number, with services being the bigger sector of the services number in its connotations for the NFP. That going into a negative a couple of days before the NFP had the big ramifications. That's why we saw the dollar getting a bit of a spanking on that one. Durable goods revision, these are the revision numbers. They came in worse than the flash numbers. Also factory orders dropping there more than expected. So that again was a bit of a negative slant into things as well. Those numbers, I mean, they're still good, still in positive. Price is still, quite strongly into the positive. It's really that employment number that got the market a bit worried.
Yeah, but as I was saying yesterday as well in the room, it seems this week we are trading employment data, yeah. And rightly so, because we are going to get a slew of employment indicators out for the rest of the week as well. So that's the main focus this week. So this is always interesting when you're a trader to know what the market is actually focusing on, because we've got a heap of data coming out, and sometimes it's a bit difficult to know which ones are going to be market mover. And this week is for the US at least, is clearly one for the employment data, a bit less so on the perhaps inflation front. We have seen inflation numbers coming out, all a bit sticky, and now let's see what the employment barometers are going to show us, whether the weather is still clear or whether it's getting a little more cloudy. So that is it. But then again, you look at the moves, it's been extremely small, right? Okay, you got the yen moving, but the yen is moving on its own as well. But all the rest, barring a little bit of sterling perhaps being a tad stronger, the rest is still well within the range. So let's say the employment factor counterbalanced a bit of the better data out of the US, but that's about it for now. And just again, as I always look at how the option volatilities are evolving, they are just remaining very low, and the options market is not worried about anything.
Yeah, dollar yen has picked up a bit. We're sailing at 8.21% at the moment. That's been sub 8% for quite a bit. So we probably should expect that to pick up, or stay elevated at least. Well, probably through to April, May, or when they finally decide to do something. But so yeah, and again, what these vols mean is just give you a rough idea of how prices are going to move over any which way. You know, euro dollar, you struggle to get 10 pips in an hour, but dollar yen's happy to move 20, 30 pips around in the same period. So you just look at that as for your expectations of how prices are going to move, not just for their option connotations. Right, well, as you can see there, we've got a ton of stuff coming out today. B.O.C. on top of it all, that's sort of fallen by the wayside. I'm not expecting anything from those guys. There's no reason for them to side any which way, although, you know, cuts being the hot topic among central banks, we may get a bit more info on the from the B.O.C. as to whether everything is going the right way for them to think about cuts further in their deliberations. Are you expecting much from these guys today?
No, I don't. We know the market is not trading the Canadian dollar very well, so any hint at a more dovish tilt is probably going to weigh pretty heavy on the Canadian dollar, I'd say. But that's the only thing I can really find in there. The Canadian dollar is trading heavy because we've seen it's completely decoupled with what's happening in the oil market. When oil was rallying, Canadian dollar had a lot of difficulties to find its footing, and that's about it. I think the market will be looking for a confirmation that they can continue to sell Canadian dollar. That is how I'm kind of looking at this meeting, but I'm not really. I don't really have a very strong base case for them over this meeting. I'd say we wait and see attitude, like all of them, data dependent, and we see from there. But anything dovish will probably be heard a lot louder by the markets, I guess.
Yeah, I think for this one, with everything else going on, Powell coming up later, and all the rest of it, I think if you're trading dollar CAD particularly, then look for any outside moves that maybe kick it out of sync with what's to come. You know, if dollar's looking a bit softer as it is today around the grounds, and you get a big rally in dollar CAD over some comment or something, then that might be something that traders decide they're going to tap on the head if it sort of moves it out of these recent ranges. So yeah, look for any outlier moves potentially rather than jumping on something, particularly from the B.O.C. because it's going to switch right back to what Powell and everything else going on, which we'll talk about obviously in a moment as well. ADP, Lucas in our room just wanted reaffirmation of what I've been saying this week about the importance of this number. It's not so much for the importance of the headline number, but for the details underneath. I'm looking at the fact that we've had several pieces of data pointing to potential wobbles for the US consumer. This may be something that adds or subtracts to that. Just the components of this data, whether we're seeing any movement in the consumer sectors like retail, leisure, hospitality, that sort of thing, could just be throwing up an indicator. It's not going to be a one-to-one correlation for this one, but it just all goes in my fundamental pot to see what happens. Also, not on there. Is that today? I can't think if it's today or tomorrow. It might be tomorrow. Challenger Grey layoffs. I think that's tomorrow, which will tell us, who's been laying off firms, if that's big as well. They just put together all the numbers that we hear on the stories. Whoever it was, Tesla cutting and this firm cutting, Tyson Krupp cutting. If they're cutting US jobs, you'll hear about it in this report. That's tomorrow. Jolts, that comes up as well. A bit lagging. It's always lagging, this data, by a month. So these are January numbers. But given what we saw with the ISM, there might be a little bit of focus on this to see if it comes in much softer, to show that maybe firms are not putting out as much hiring adverts as previously. If they feel like they don't need any more staff or can't afford any more staff, they won't be advertising for staff. So that's the Jolts numbers coming up later. Right, we've got Powell up as well. He has the first of his testimonies to his bosses in the Senate and Congress and whatnot. The report was already out last week. His testimony was out last week, which is pretty much a rinse repeat of the last FOMC statement. Lots of chatter about what might come from Powell. Probably the baseline, for certainly for me, and I know for a lot of us, is that it should be just a rinse repeat of the last FOMC. However, the risk is that given that we've had some time under the bridge, water under the bridge since then, other data, new data, there is a chance that he may wheedle into some of his comments just a bit of an update based on what that latest data has been, if he wants to pass a message to the markets. On the other side, this is a political shindig. So again, we're in an election year. So expect some of the questions from politicians, which are usually, pointless normally, to be with a bit of a slant towards party politics on that front. Kay, you got any big expectations for Powell?
Actually, no. I think just steer the course, data dependent. But again, yeah, there is perhaps a little bit of risk building. Well, first of all, they had a sticky inflation stuff, but then some of the employment, as we've already been repeating on every flow show since, are starting to show perhaps a little bit of yellow, orangey flags. Is he going to talk about it? If he does, it could send the dollar perhaps a little lower. But I've got also the impression that's the way the market is looking at it. The market is waiting for him to give that sign, saying that, oh yeah, we are looking at and perhaps this and perhaps that. So on the and as we've been saying, I've been saying it's an employment or unemployment week. That may be the focus of the market as well, through whatever the hours he may talk today and tomorrow. Yeah, but as we know already, the statement wasn't really anything to really comment too much about, because it's just like, yeah, steering the course, and we will be patient, and we are data dependent.
Yeah, exactly. I don't expect any change of rhetoric. It's going to be full of jobs not done and such is alike. So yeah, but if he doesn't mention the weakness in jobs, or if he doesn't comment on anything that's not on script, that may also be taken, I wouldn't say hawkishly, but non-dovishly by the market. So it could, just not saying something can cause a reaction as well as saying something. So we need to be prepared for that. What else we've got going on? Oh, the UK budget is going to kick off shortly, in about an hour or so. I'll put a bit of not a preview, but just a few thoughts in our chat room. I'm not expecting any big ways for the UK or for the pound out this budget, just in case you were wondering about that. Again, it's an election season, so there's going to be a big slant towards that. There's going to be a lot of politics involved, probably. Whatever the Chancellor does now has potential to be reversed or watered down if and when the new government comes in, depending on when that is. I think maybe the biggest take from this budget stuff is if afterwards it causes Sunak to call an election date finally, which is what we're still waiting for. That's going to be based on the mood of the budget, how the public see this budget. Just to go through the mechanics of it all, the Chancellor will step up, he'll list out all his palaver, he'll talk a positive game, how we're probably in technical recession now, but his policies are going to get us booming. It'll all sound wonderful and jelly and ice cream. Then the opposition will shoot it all down in flames. Then the OBR, the Office of Bodge Responsibility, will come out and price it all up and tell everyone they can't afford to do it, or they can afford to do it, or it's going to create these fiscal waves or that fiscal waves. That's the sort of stuff that caused a big wobble when Truss and Kwarteng did their budget thing, September 2022 or late 2022. So that might be something for the market to watch.
Yeah. Ryan, I've got a question for you. When is the OBR coming out with the what if they can afford it or not?
They usually come out pretty soon after.
Yeah, what I thought today, right?
I can't remember because they'll have it. They'll have all the budget in advance. I can't recall if it comes out the same day later on or if it comes out a day later or something.
I don't know either. And so, and if you say, well, we've been chatting about it in our chat room, of course, the possibility of Sunak calling or putting a fixed date on the election. When would we possibly be expecting that? Towards the end of the week, next week, or when?
I don't know. If they're going to wait and see, thanks, Gavin. 2 p.m. the OBR will announce that. So that'll be about an hour after he finishes. It depends. If Sunak probably wants to see the response, so he'll be watching the presses, he'll be looking for public opinions and stuff. If it's taken favourably, then it could be any time. But that's just my guess. I don't know what he's thinking of. Could be end of the week. Might be something like the weekend, because you get a lot of opinion pieces at the weekend talking about stuff that's happened in the week. So it could be after that maybe he announces something, if he's going to do it. But that's just pure speculation on my part.
Okay.
And I know Mark was talking in our chat room that there's a lot of feeling growing that he may announce a May election. So I think that will be it. If all this stuff is taken really positively, if everyone thinks, yeah, great, this is a reason to vote for the Conservatives, if that's what they think, then he's likely to call a sooner election than a later year one, because he want to try and use that momentum to save his skin, which probably a lost cause at this point. Whatever, if they promise us all gold bars, they probably lose the election, so it might not matter anyway. Anyway, that's UK election stuff, and you don't have to sit through it, but I will. Right, what else is going on? Lots going on. Trump and Biden are pretty much clear now for the runoff, the election to come. Trump sailed through all his primaries, as did Biden, so it's looking like it's the rematch coming up from the US elections. So that'll be a lot of fun. Not worry about till later in the year. Just on the geopolitical front, again, not something major, but I've just noticed a pickup in comments coming from Russian news agencies, TASS in particular. Yesterday, they reported that the Russian Defense Ministry said they scrambled fighter jets to escort French military planes over the Black Sea. The reason I point it up is because it's hitting the headlines. This sort of stuff happens pretty much daily. All this, if it's not Russia flying over UK waters, it's everyone else flying over Black Sea waters. The fact that it's coming up in more and more headlines, visible ones, just shows the rhetoric that's been going on over the last few days. Russia's foreign international director said Macron's statement about NATO soldiers in Ukraine shows irresponsibility of European leaders, and they are pushing the world to the brink of nuclear war. Again, another TASS piece. So the PR machine in Russia seems to have spun into action at the moment. So just keep an eye on that for risk trades and whatnot. Okay. Have you got anything to add on top of all that?
I wouldn't dare, right? I wouldn't dare to add on top of all that. We can talk about other stuff, but it's really not right now. I think the most important for our audience here is that the NFP competition is out, and
yes,
to get your votes in.
Get your votes in. I'll put the link up there when K-Man's having a look at the charts, and you can all get your guesses in for that.
Yeah,
Right.
I've
Last
already
thing.
put in my guess. I was the first one, so no expectations,
No,
no waiting for ADPs or whatever to put in the guesses. Just going for it.
Exactly. That's the way to do it. Just a quick reminder that the BOC is 15 minutes earlier these days than it used to be. It used to come in at 3 o'clock. Now it's at 2:45, 3, because they want to stay out the way of the any economic data and whatnot, as if anyone cares. But they moved that last month, and that's the new time now forever. So just a reminder in case you're late and you're having lunch and you're missing all the fun. Right. Let's go on. Let's start with have a look at euro dollar, and just want to highlight we have got a ton of options expiring again today between 108.30 and 108.70. We've got some 8.5, just over 8.5 billion going off as all these option traders try and squeeze as much pips out of this low vol as they can. So yeah, and that was a bit of a pickup because I did look earlier this week to see if there's anything major for the rest of the week, and there wasn't anything overly big, but it seems like these positions are putting on fairly short term, so they're being put on daily. So another big chunk coming in there. So again, PAL starts right on expiry, so probably going to see the price glued around unless we get any big headlines coming out prior to that. But for now, the story is going to be pretty similar for a lot of pairs trading this today. A lot of risk events to drop. It's going to be, can we move to some of the range edges, some of the levels that need testing? Can we break those levels? Are we going to hold any breaks? So we're still in the middle. I'm still mainly going to look at 108, 109, 109.20s in euro dollar for the range. And if we break out that range, is it big game changing news, or is it just the market stretching its legs again? But it's going to be difficult to jump on a move and think, yep, this is now a new trend and we're going to be off to pastures new. It all depends on what comes and how it's assessed. So I've got no big expectations for one direction or the other. I'm just going to follow the price action in a lot of pairs and see what it wants to do. Dollar yen, pretty similar. Where's all my bits gone? There we go. We've had another move on those sources pieces down towards that prior low 109.20s, which is a bit of a level. Didn't quite get down as far, but it's in the frame. If we get down there again, then maybe we're going to be looking at a bit of a break. I don't know about you, Kay. I might be getting a bit twitchy to just stick on a couple of shorts, a little short now and again, just to play the this rally sell mode that we might be moving into.
Yeah.
But then again,
actually, it may not be a bad idea. I mean, you know, the best thing that could happen today is that Powell actually does not give anything to chew on. And we get a little blip back into the 150s. The stop is actually so easy to put right now, right? Had at least 4 or 5 tops in that 150-80 zone. Adapt your position size. Do smaller if you want to play it, but it's tempting, right? It is tempting. And if you want to steer away from the dollar, look at something else that may be a bit weak. And why not something like the Canadian dollar, for instance? Or the Aussie, but the Aussie is I don't know, it's a strange one. It could be. Perhaps even the Kiwi is better, but then you're struggling with higher interest rates as well if you want to stay short on it. But then perhaps finally the Swiss yen, finally maybe the Swiss yen is going to be, because it's now trading well below 170. Swiss is actually again getting sold today. We had a little bit of a setback yesterday on the Swiss pairs because of the stocks coming off. I reckon, but it's again very, very big. Swiss very often today. Get a blip there. This could be one of the crosses that you can look at. But if Powell does give something to the market, yeah, dollar yen could actually get hit because of everything that's now going on and people looking at what's going in on next week. There's a lot of speculation and information coming out on a daily basis now, and where I was extremely neutral on the yen. I'm starting to think it's perhaps not a bad idea to be long yen against something.
Yeah, that was my thought for dollar yen. Get a nice little rally up into the 150s and maybe give it a little tap on the head. Got to remember though that it's going to be triple. Or is that past? Is that tonight? We get the triple rollover, or is that on
The weekend? Yeah, we get the weekend tonight, right?
Yeah.
Yeah. Then you pay for the weekend. That is true. If I don't know, for people who can trade options, the problem with buying downside in yen options is a bit the same as also having a position, your pay away forwards. So if you look at doing and the skew is very much for the downside as well. So
Yeah.
if you're looking to do downside on dollar yen, it's still feasible, but you're going to have to look at the strikes a little further away. If you, for instance, want to include the Bank of Japan, you're looking at the first reasonable strike, I would say, is probably 148 or so. So that's still a bit away from where we are now.
Yeah. So yeah, but for now, I think it might. I'm thinking that it might be worth the cost to sit in some shorts if we're going to do good bounce. I certainly wouldn't be selling it down here, that's for sure. Anyway, that's that for dollar yen. Oil and well, we can look at oil. Still making it hard work for buyers. We tapped up in that 80s area and then got knocked on the head, so that's back down again. Not coming down too far, but we had all those rumours about extending production cuts and the like, and still can't find a proper bid on that. So it's not out the woods. Probably geopolitical risk is still a big part or a large part of the bid in this. But also that manufacturing data just starting to creep back up again in the PMIs and stuff potentially might make the demand side of things look a bit better, but still not a sideways action, still very tightly contained. So there's really not much direction to be seen here. But if things get resolved and demand is picking up, then maybe there's upside to come on the fundamentals anyway. Gold, that's sticking to its near its recent highs. Couldn't quite get to that spike high. Well, I'm not going to rely on that high too much, but we got up close to it, and we're not dipping back far from it. So that's keeping the move in play in this break in play that we had here. So that's fairly bullish. Devaj, I know you're here. There you go, mate. Want us to look at gold? Finally got up. We talk about sitting at 2030 for months and months, and here we are over $100 higher in the blink of an eye. But that's what breaks do for you when you get these breaks. As you can see, we broke above that 70 area, that prior high, and this area here held it, broke it. So this is going to be your big support down here now, 2075, 2088, that former high. That's the do or die number right now for this one. But for the rest of it, bit of a similar situation to S&P. When you break into areas that haven't got a lot of historical price history, you need to let the levels form up. So I'd have a level roughly about there, 29, 21, 19, 20, maybe up to those levels there, 24. So bit of a support area. That's where the price has got to hold now in this area to keep this break alive. Back below there, below 21.10, then maybe we're going to test a big figure and down here. As for the top, well, we're just getting a few knocks of resistance coming in, but it's all short term. So this high is obviously going to be the main watch point above. If we have a test from here, maybe it gets to 35, maybe even 40 and holds. That will maybe show that we've got a bit more of a top building at the moment. But even if it nicks a couple of ticks higher, 42s, 43s, 44s, and pulls back a bit, that will tell you that we're still willing to make that move higher. So yeah, I hope you make your money in this one, Derej. It's been a bit of a volatile one, and it's always difficult if you don't catch those sort of moves. You might get a little bit of FOMO, but just let the levels do the talking until you get something more significant. It was interesting. Yeah, go on, mate.
Yeah, if Derej looks at Fibonacci, if you take the move from December to February, that moved down, and you stick a few extensions on that, you will see that there's one coming in around 21.52, 53. So if you want to have a level to the top side, that's one you may have a look at as well on the top side. So that just about gold. Yeah, move on. You can move on now.
Yeah, thank you very much, mate. I did see one piece of analysis coming up. Well, I'll call it analysis. One headline that came up. Obviously, we had that funky move in Bitcoin yesterday, and an analysis. Someone who does Bitcoin analysis that the price correction, this price correction here, which was a 15% move, was just healthy consolidation. I don't know anyone that can call a 15% move in any sort of market healthy consolidation, but we had a blip in that. Just shows you how dangerous this thing can be at times. We have come all the way back up again, so maybe it was consolidation, but if you're getting 15% consolidations in markets, I have no interest in that whatsoever, because I don't know anyone who can withstand a 15% correction in any asset.
A healthy fat finger.
Healthy fat finger. But anyway, that was fun and games last night for Bitcoin. Right, Kay. Let's have a quick look at the S&P, because that we're getting a bit more of a wobbling stocks at the moment. Given the event-driven week, there's a lot of people who doing a lot of positioning, repositioning, jiggling around, jockeying around. So we've had a bit of a carve up through some of the short-term levels, the ones that I was particularly watching to see how they would perform. So that move yesterday pretty much carved through all of them until we got down near the big old 50-50 zone, and we bounced just ahead of that. Right now, we're just knocking on the 5100 level, the big figure. So that's become a bit of resistance again, which will give all the sellers up here a bit of confidence. We might be washing out this 50-80 area. I might need to take that off my chart. Let's do that now, shall we, just for the sake of it. So now we've got definitely firming up this support in here. Shows you that just how the price action builds, and now it becomes a bit of a bigger level, just like it. The bigger levels were building down here. Upside still needs to be defined. I want a bit more clarity up here. We're going to find resistance into this old point, and that's going to mark the top. That would suggest maybe then we're going to start breaking down some of these levels that we have as support. Or are we going to go all the way back up and nick a new high, or even kick on to further highs? But for now, this is confirming support. We need to see the picture up here define a bit more from there. But definitely you've got some wobbles coming into stock markets. Maybe all now we're getting a bit of vertigo kicking in, but we shall see. We've been here before, and then all the sellers get confident and they get taken to the cleaners again. So until I get confirmed resistance over a decent period of time like that, I'm not ruling anything out. Okay, do you want to have a quick butchers?
Yeah, it's going to be a very quick overview of what's happening. And today, since we have the Bank of Canada, why not have a look at the dollar CAD? And this is how it looks on my one of my shorter time frames. Usually, I look at dailies, 4 hours, but this is on the hourly because it's nice and visual. Well, basically, it's 135, 136, figure 10 for a starter. And then here, this is an interesting level here, 136, 2025. Okay, if that starts to go this afternoon, we're probably going to need an extension to what's happening in dollar CAD right now. we can see we're in a bit of an upwards move, despite really the move higher that we had in oil. Gas is moving up again, and yet the Canadian dollar can't find a bit. This is how the mood is right now in this market. Is really a bit adverse against the Canadian dollar. So 136.2025 is the level here. 135. That is going to require, in my opinion, a very dovish power to break right now, because I guess we are already on setbacks going to find bids perhaps around this 135.40 in the dollar CAD this afternoon. As the base case is for a neutral Bank of Canada, I haven't seen anything which is going to push them to remain ultra hawkish. So it's going to be a data dependent market, I trust. And also the mood in the Canadian dollar is reflected in this euro CAD. You know, euro has been a poor child. Whoops, has been a poor child for a good while, and yet we see those euro crosses catching a bit of a beat. And this one is a prime example. We were in this channel. We broken above through 147. That is now going to be your support into and after the Bank of Canada, and then into we have ECB tomorrow as well. So this is going to be a big mover, or should be at least a big mover tomorrow. But look at this 148 figure 10. Double action over there. It should be a decent level. We are trading 147.70 as we are now. A move through there could see another big figure on top. Because just to look 10 seconds ahead of the ECB, I think it's a base case that ECB is going to just continue to steer the course, because we also had like slightly sticky inflation numbers even coming down, but then they were talking about those green shoots, and then you had the Germans apparently showing just a tiny green shoot, perhaps. So Lagarde can hide behind that to not be too dovish in for the euro tomorrow. But okay, this one is an interesting one. 147 the figure, and then as we were talking about these, whoops, no, I got to go back here. Canada yen, Canada yen, it is struggling. Okay, it's struggling. 111. I'd say 111 is should be 111 figure 10 should be a decent resistance. Perhaps already 110.65. We're trading around 110.20, are we? Yeah, we're trading around 110.20. If the Bank of Canada, is dovish, 109.30.50 is very possible on this cross. Okay, so this is perhaps one that may come on the radar if we start to see more precise hints at the Bank of Japan possibly doing something next on the next meeting, or if those wages are really good. This is potentially a cross that you may have a look at. Okay, and if we get down there, have a look at what's happening at 109.60, 109.30s, and then we're talking about lower levels here already. A quick look at the cloud. Yeah, that's coming in around here, but that's not the major one in here. I think it's if we start to get back below 110 and those 109 mid 109s, okay, on Canadian yen. Traditionally, have a look at our Swiss. It is going and still going. Swiss got hammered again. We saw a little bit of a setback, as I said yesterday afternoon, but the dips are still relatively shallow on this. And this, as I said, is one of my base pairs to measure the Swiss strength or weakness, because it is the main trading partner, Euroland, and also an equal percentage in their reserves than as the dollar. So Euro Swiss is really a very good barometer of what's happening in the Swiss. And as I said, respect those levels here. It's coming. It seems to be coming. Respect those levels here around 96, 75, 90. Okay, on the Euro Swiss, right? We could be there at this day, at this rhythm. We could be there by the end of the week. But still, I would say I'm going to at least take a little bit off if we see there, and relax a bit, see what the market wants to do into the S&P. I still think that into the S&P, we are going to see a little bit of a pickup of that speculation, although we see regular sellers in Swiss franc nowadays. Dollar Swiss unchanged, 87.60, 89 the figure. That's going to be valid for the rest of the week, in my opinion, over the US data. We have a lot of US data coming out, so this is going to decide on this dollar Swiss. This is the picture that I'm looking at right now. I'm half hedged on my calls, and if it goes through 89 the figure, I think we may push higher into the S&P. And last one, have a look at. We are on our way. We are on a bit of resistance here in sterling Swiss, but it's been a very good hold of late, looking a little bit similar to the Euro Swiss. Unsurprisingly, because Euro sterling is just fixed at 85.5 right now. This has the potential for 114, in my opinion. That's still yeah, that's still very possible unless we get something bearish on sterling. But this still looks relatively positive. And just and I'm going to finish on that and giving it back to you, Ryan. Just one thing again, I'm repeating that when you trade and when you have a big week on the dollar, if your risk is you don't want to have too much risk on events and stuff, crosses are something really interesting to look at. So I would really suggest to people to if you're a bit too dollar centric to start looking at crosses, because they can give you a little bit more joy in your positions and usually go a little slower than dollar pairs on data releases and things. Back to you, mate.
Thank you very much, mate. Good stuff as always. Right, hopefully that's got you all set and ready for today's action. I've put the link to our NFP competition in the Zoom chat there, so have a crack, win a free month to the ForexAnalytix platform. And yeah, answers only on that tweet only, please. Yeah, Ali, the show will be up on YouTube and whatnot much later today, so you can watch back all our wonderful analysis, but not too late, otherwise it will be after the event. Thank you, everybody. Thanks for coming. Do trade safe this afternoon. Be careful. If in doubt, stay out, and we shall see what happened tomorrow. Have a good one all.